Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Dion from Dion Talk. How you doing, buddy?
Howdy, doing great. I'm excited for this topic because I watch all your stuff and I am always hesitant to disagree, but there are some things we do disagree on. Like,
Yeah, I think disagreement is fun. I think healthy debate is fun. Name calling is not okay. But yeah, let's get into it. So what we're going to talk about is the affordability index. Let me just kind of tee it up for us, so you can show me where the errors of my way are. If you've read my book, One Rental at a Time, you know that the affordability index introduced to me by Bruce Norris sometime in 2005 or six saved Olivia and I. We had 8 single family homes in California, specifically Fresno, California. And basically, Fresno's affordability was at an all-time low. What this means is it's very risky to buy and it's much better to sell. After validating that data, we sold every house. We 1031 into apartments. It saved our bacon. I've been looking at the affordability index every quarter since 2005. And here recently, because rates have gone up, affordability has crashed. You have some thoughts about affordability that we should dig into?
so I really like that you were able to use data to pivot. And you were able to literally see, okay, these houses are not overpriced, but I'm going to get the most value out of them right now if I sell. And then you moved. So over the period of time, you've been absolutely successful. I watch all of your stuff. I'm trying to emulate the things that work for me, which wasn't cash out refinance, wasn't HELOC, wasn't sell to 1031, right? So everything you did wouldn't work for me. Everything I do wouldn't work for everyone else, right? So I actually like watching several different content sources and then taking the best that would apply to me. So your information on affordability index might apply to somebody else and be the metric to use. I look at it. Here's why I don't want it to be the 100% decision maker. And I don't think you're saying to do that either. I think you're saying here's the way you look at it, to now look at your assets maybe through a different lens.
Sure.
Before 2020, the affordability index was a lot more accurate because people would, in an area, make money from the plants, from the base, from the port, from the economic drivers that were there. So you could look at 2019 data in 2020 and think, okay, our affordability index is adjusting this way.
Correct.
In 2021 and 2022, remote work is such a part of the equation that the current affordability index based on last year's data, I think has adjusted too much to say, because it's so hard to afford a place, it's the right time to sell or the right time to buy or the right time to any decision. I think you look at all of the other things like population growth, what's the cash flow there. So in an area here, 3-bedroom apartments were renting for $1,800. The pay increase was around 5% generally for the state of Washington. Those 3 bedrooms are now renting for $2,500 to $2,600.
Oh my goodness.
24 to 26.
Wow.
With a very little pay increase, because you don't have to live in Seattle anymore. You can come down hour, 2 hours south, go in once a week to work, but work remotely. And if you're paying $2,600 for a place in Tacoma or Olympia instead of $3,000 or $4,000 for a place in Seattle, you're saving half the money with this remote work. That doesn't mean you're moving to Arkansas from Maine. You're moving 2, 3, 4 hours out from the biggest municipal city around you, because you only have to go in once or twice a week. So the affordability index on a more local scale it's out of whack right now. I think it will be for about 2 years until the remote work stabilizes, because there's a couple of things going on. When remote work became an option, people said, I don't have to stay in San Francisco. I don't have to stay in Los Angeles. I don't have to stay in New York. I can go out, draw this concentric ring out to the part where the balance of money to distance makes sense. But I don't want to buy. Because what if, Pinterest said, here's 20 grand, go somewhere else. We're going to pay $89 million, break our lease. Tesla said a year later, come back to work or you're fired. So people didn't want to buy, they were renting. So rents went up, but now we're reaching stability where a lot of companies, state positions, county positions are saying, yep, we're going to keep you as a permanent remote position. That renter now becomes buyer, which again is going to increase property value because of demand. But it'll be, there's a delay with tax season to get the current affordability index on an area because
That's
people are working so remotely.
That's very interesting, because the reason the affordability index is powerful to me is there are three variables and they can all go up or down independently, which makes it a very powerful but also potentially confusing metric, right? Price, rate, wage. And what you've identified is perhaps the most misunderstood variable, wages, because every YouTuber on the planet talks price. A couple of them talk rate. None of them talk wages. What you've just done with wages is help solve something that's been bothering. And I'll talk about the lumberjack, somebody both you and I know. He and I did a deep dive on New Hampshire real estate like 4 weeks ago. And his affordability is an all-time low, like crazy low. That doesn't make sense.
But still being bought.
But still, exactly. But
Exactly.
still being bought, right? Mathematically, affordability doesn't make sense, but still being bought, still crazy low days on market, still over asking. I think said it in the video, it's the most unhealthy market I've ever seen. But now what you've just highlighted is the reason why. He lives in a non-tax state, New Hampshire. He has Massachusetts a couple of minutes away. He has New York a couple minutes away. And what's happening in his area is he's getting people with bags full of money who have income in these other high income areas like Boston and New York coming to live in his backyard because of remote work. I think you're right. I think you're a genius.
There's two things. So the remote work is a huge factor, but the second thing is the Great Resignation.
Exactly.
A lot of people are not just changing jobs because instead of this 5% increase, I'm going to see 10 to 20%, sometimes more, right?
Yeah.
Also, you have the negotiation of saying, hey, I work for Convoy Trucking in billing, but they make me come to the office. I'm going to come over here to Werner and work in billing, but only if you let me do it remotely. So now, even if they didn't get the pay increase, maybe they negotiated the terms of being able to work remotely. So changing jobs, companies with the option, we're going to see more of that.
Yeah, I
and
think so.
It doesn't mean you don't want to use affordability index because it still tracks a bunch of the data that you want.
Mm-hmm.
I think it's going to take a couple of years to balance out as this remote work becomes stabilized. We're still looking at the other metrics.
Oh, for sure. Yeah.
So as an investor, price, rates, rents set by wages, remote work. So my friend that just closed, she just signed a lease yesterday on a duplex place to tenant in a 3-bedroom. Got the rent she was looking for by somebody who has a job in Texas, but moved to Washington and still has the job in Texas. So they're making the money from wherever they came here, able to pay rent that would be significantly more from where they were moving to where they're moving into here.
Right.
They're getting a deal, and she's getting this massive rent increase that the area is seeing because of remote work.
Yeah. So I think what you as an investor will do, and I need to take a look at this specifically, is I think in every state, there are cities that are just cheaper to live. I happen to be investing in Fresno, California, which is one of the cheapest places in California. I think the Inland Empire and the high desert are cheaper, but not by much. But yeah, I can tell you, I haven't looked recently, but there were a lot of Silicon Valley people and LA folks moving to the Central Valley. It's cheaper, like noticeably cheaper. So that's very interesting. We have to figure out, maybe look at U-Haul rates or something, because you're right. Fresno, again, I have the affordability index. It's funny. I looked at it this morning. I'll just bring it up since we're talking about it. This is the affordability index as of Q2 2022. So for California, it's a 16. The US is a 38. These are on a scale of 1 to 100. And Fresno's a 31, right? For me, back, and again, just so people realize this goes back in time. Oops, here we go. Goes back in time. You can see where Fresno's low was 2005, was a 17. The US low was a 10. California low was 11, right? LA was a 9. Sacramento was a 19. So San Diego was a 8. Dude, Santa Barbara was a 6. Crazy times. So again, the other thing to take into this is affordability is down, but it's not record lows, right? Because the US was an 11. Here it's a 38. Fresno was a 19. It's a 31. But I think that's very interesting because a lot of people, California has lost population, I think 2 years in a row, might be 3. It's the most expensive state. Makes sense. Yeah, there is a migration pattern going on. So I think you're right. I think, and you're absolutely right. Wages, the W-2 it's a lagging indicator. It's a year behind. I think you're absolutely right. I think that's very well done. I had not thought about that.
Yeah. So again, I don't come on here to disagree.
Yeah.
I'm glad that sometimes we see things differently. You've opened my eyes up to a ton of things. I say it often. I say thank you. In 2020, I was watching prices go up and I was like, yep, I'm going to sit back like every other person is saying and just wait. And you talked about interest rates. So I looked at interest rates and I was like, wow, this price is up 20%. My yield is better. My payment is less. Interest rates are half what they were a year ago. So I wasn't watching all of the metrics. So again, thank you for the work you do. I watch your daily update every day. It's the information that matters to an investor. It awesome. Really is.
Yeah. No, but this is. I mean, the affordability index is my stoplight indicator. Green. It's usually green, right? If you go again, if you're in California, you're really lucky. It goes all the way back to 1981. It was monthly. Now it's quarterly. For my market of Fresno, California, it's been above 40, which is really healthy, like 90% of the time. Maybe 85% of the time. Then 5% it's yellow light, and then 10% it's green. It's getting 30 is a yellow light, and we're at 31 right now. But you're right. Maybe it's not as bad as I think it is, because if Fresno, like just for example, if Fresno is adding, pick a number, 5, 10, $15,000, 6-figure earners, that's going to adjust the ratio next year. And I think that's happening, right? I think there's a bunch of tech workers who are like, hey, I don't got to work in the city for, it's crazy. San Francisco, you rent a studio apartment for like $3,500. You can have a house in the lake in Fresno for $3,500 a month. It's wild to think about. So thank you for
funny
this.
That you mentioned the high desert. That's where my brother has about a third of his portfolio. Most of his are in Washington, but he's up in by Edwards Air Force Base, the high desert there. And we were talking, he doesn't understand. He doesn't have a lot of tenant turnover. He runs his kind of like mine. All of his strategies are for tenant retention. But the rents next to him have just doubled. And he's like, nothing's changed in the city. The population is the same. There's no new businesses. I don't understand. So I was kind of having the conversation with him saying, right, but LA is an hour away, right? So how many people are going down there once a week now that wouldn't do it if they had to go down 5 times a week?
Yeah.
So he's in a situation where tenant turnover might be the best thing for him.
Absolutely. Yeah. Yeah. If you got to go from 1,000 to 2,000, you'll clean up a unit for that. No problem.
So that's my video that I'm going to make for Thursday now. When tenant turnover is good.
There you go. Well, Dion, do me a favor. Where can people find you where you can put out these little pearls of wisdom that I missed? It was a nice job.
Right here on YouTube, Dion Talk Financial Freedom.
Awesome. Thanks, buddy.
Ciao.